You know, I do apologize. You know what? I didn't even have my, yeah, thanks. I see FX Low saying no volume. Thank you, FX Low. And actually just got a beep into my system. So apologies there. So let's just go over this real quickly. So I do apologize on that. So we were talking here in the morning bid with it says the trade tensions over Iran with world headlines that dominate with the meeting with and the key meeting between Trump and Xi Jinping and the other countries advising that this is really a concern and that they've made a mention to the or made their points known that this issue between China and the U.S. is really inflicting a world of hurt on the global economy. But the main event is going to be with Xi Jinping and Trump. It also mentioned that in China, the central bank had pledged their opportunity to support a slowing economy as global risks rise. And we'll get on lower here is speaking of the Eurozone, the bloc's June inflation report is due. Remember that in May, the core headlines disappointed markets, but after the disappointment of German inflation yesterday, a 1.3% year on year or flat on the low of the last month, no one expects great things today. The 10-year yields, German yields are already at their lows. Then mentioned the across the Atlantic, the personal consumption expenditures, the Fed's preferred inflation gauge for May is to forecast to come in at 1.6%, a fear that April's already lackluster number will be revised lower. All in all, it's expected to show the Fed's 2% inflation target is still distant. Finally, let's not forget Sunday's European Union Summit. The EC European Council will wrangle over who might lead the European Commission, and the ECB president is also in play. Bonds are flat, but it's been a great year for bond boons so far this year, with the 10-year yields down 60 basis points. German yields started the year at 0.15 but are now at minus 0.3. And we'll go and move into the Forex. Dollar holds steady and the market's edgy ahead of the Trump-Xi talks. The dollar trod water early on Friday's investors awaited a crucial meeting. The mood improved the previous day after the South China Morning Post said Washington and Beijing were laying out the agreement would help avert the next round of tariffs on an additional $300 billion of Chinese imports. Negotiations between the two world's economies have been fraught, so traders and analysts caution that the resolution of the G20 summit is far from certain, yet markets seem to be clinging onto the hopes of a progress in a meeting between Trump and Xi Jinping. Markets are doubtful if the leaders of the U.S. and China are going to reach any agreement. The drawn-out trade war has slowed global growth. Market moves should show there's less concern about the U.S.-China meeting, but the results of the meeting have much expectation for the dollar and risk assets to go higher, said Junichi Ishikawa. Anything less than what will lead to a big reaction in the opposite direction. Highline the jitters, gold perked up in Asian trading, rising 0.66% to 14.18. The Aussie dollar clung to recent gains against the greenback. We're still showing that. And China is the main destination for exports from Australia's vast commodity sector. So the outcome of the U.S.-China talks could greatly influence the Aussie. So let's go on and move into the main screen. So we did get the Spanish GDP, but as you come into the States, and we do have the HICP flash data at the top of the hour coming up. But the reference here was, and it did mention that the personal income inflation and consumption data, which will be out, going to be key, whether I would have said to make the move, but we've already made the move here, right here. And really from what I see, everybody, his brother and sister are expecting the euro to move higher. Same here. Although I thought the dollar might make its move first, and then we turn around and lose that. But we've already seen the euro dollar making its run. Also, Canadian GDP data is going to be out today. Now we are holding just below 31, and someone had asked me in the Asian session about the support levels or where that area is. And I mentioned that 3080 is a support level here for the excuse me, for the dollar CAD. So we'll see how that reacts because I think someone was talking about getting aggressive. Uh, the currency, actual, the CAD itself. And I thought, well, wait a minute, we've already, we're already at key support 31 and support below that is at 3080. And don't forget the risk you have is GDP data is going to be out. So we'll see how that plays out. We do also have Shy PMI at 10 a.m. Eastern and University of Michigan, but that's final numbers at 10 a.m. Eastern. So let's go and get out the bias chart. And we're going to point out in the euro, but to me, in some sense, the important one is going to be the cash dollar and where potentially that can fall to. And if you're with us in the daily wrap up, we had emphasized that, where if we don't get that, the dollar can really start to go in and slide lower. And the reason I'm referencing that is because where the key resistance is. Now, yeah, we're up here at 1389. We kind of bumped in that, we came lower, but I really think that this thing can start to take off. And once again, it goes back to what I've been mentioning, previously, where people say, "Well, look, all the troubles with the euro," and I tell them, I go, "Well, it's not about the euro; it's really about the dollar index and the risk for the dollar index." So when we look to how much further we can go and push up, or where the real resistance is, I think we can go and push well beyond this. So let's go and take a look here at the 2-hour chart. And I think that the euro could really move much higher. We could get a heck of a move today. But when we're looking for resistance, it'd have to be this 1417. It doesn't mean that that's going to be the high today in any way, a respect whatsoever. But that's the resistance here. It's going to be 1417. Yes, we're bumping up against that 1389. We got up to what was it, 1395? But the real resistance is going to come place here at 1417. Think of this as the trigger where the market can pause. And like I said, when we look at when we put our bias chart resistance and support levels, that's where we expect a market to come in with a good reaction and possibly the market push back. So we may see us come up to 1417 and push back. But I think that if we get that pushback, it may only be temporary where the market turns around and pushes once again and we push beyond that. But so our resistance is going to be 1417. And support, we're going to go right there. Let's see, that may be a little bit going overboard here. Let's go with 1337. 1337 for support. I'm actually going to jump right into the cash dollar right now because it's there where I think that's where the real movement is here, i.e., the euro. Because as I mentioned, when I've been mentioning for the last couple of weeks, but actually close to the last 3 weeks, because I've been so bearish the dollar, although I thought we are going to get this area would hold here. But my case has been because a lot of people said, well, wait a minute, all the problems that the euro have. And I've said, look, tell me something I don't know. But really, I'm looking at the euro as a de facto for the cash dollar index. And my take is that we could really start to break here. Now, one of the things we referenced here yesterday in the daily wrap was the move that we made down here, down to the 96.50, and how the market had come back very, very strong. Actually, that move had not even transpired until the Friday. That was when we had the retail sales and we took off and the market really got clipping along. But we fell again. And to me, the key thing is that we'd come down here to this 23%. And the market has held, okay, it has held, but I was expecting somewhat of a decent bounce and at least to challenge this 96.50. Remember, our buy chart resistance had been 96.56. So I was looking for the market to come back up in here. And then if it can't prove itself, then we'll turn around and come back down. Well, the fact that we're already starting to slide really is and starting to pare back. We haven't taken out 114, but it's a bit scary because one of the things we've talked about was the potential for the cut from the Fed that will come, and that's what's really knocking the dollar lower, and how this data comes in weaker, and the possibility that, like I said, that this move could really start to cascade much lower because once again, it's not like as if I've pointed out before, it's not like as if we're right here or here. This market's way up here, so it has more room, a lot more room to fall. But the thing that's worrisome is you come down here to the 23% of the entire move of 88.27, 88.25 to 98.37. And then the bounce it's not even a bounce. The market just kind of pauses. You know what I'm saying? This would not be considered a bounce, at least if we can get above, let's say we made it up to about, let's say 96.72. Then we could say, wow, that was really, the bounce was kind of poor. This is not even a bounce. This is just basically some short covering, and the market can't even forget getting above 96.50. It can't even make it to 96.50. So the door's really open for us to really stretch another move lower. Now, like I said, there's another key level here coming up at 95.65, the 161%. That may end up confluencing here with a move maybe into the 1420s. We'll see. And then we see the market kind of push back a little bit. But I think we can break even much lower than that. Hence my thought about the euro is that, wow, why I think that the euro can really take off. Now, like I said, I've been seeing here, I've seen either whether it's stories from FX Street, not FX Street, but I think of there was a Forex Online, but also some other stories. And boy, everybody is looking for big moves in the euro. And I saw one story yesterday that the key support they're looking for, and they're looking for a move to 119. It wasn't them, but I'm saying I read a story, and they were looking for the support only coming in at 1348. And so they're looking for a much, much bigger move. Everybody's looking for a pretty good move here in the euro. And to me, like I said, the way I'm looking at it is what's happening in the dollar and why we can fall. And of course, the euro comprises 56.4% of the cash dollar index. So boy, I think we could really see this cash dollar slide, i.e. the euro really start to go in and take off, regardless of Draghi and what is all happening. So when we look at here with the cash dollar index, we'll look and see where the market can potentially go to. Then I'm going to go with a bigger push lower, which is going to be this 95.65, potentially where it can go to. And resistance. we'll go with 96.44. And I'm not even sure they can make it up there because I'm just thinking if we get a good report this morning coming in for personal consumption, because that's supposedly that's what the Fed really keys on. Well, depending on how that comes, we could maybe get a rally here, but I believe that'll be a rally that'll be quickly faded. But that would be the stretch, would be 96.34. Now, not to jump out of order, but to me, it was key to focus in what I think could happen with the euro in light of what's going on and potentially going on with the cash dollar index. So we're going to move into the cable. Well, the cable's still hugging near its lows, and it has not been able to garner or gather any kind of esteem. And the odd thing is, I wouldn't say odd, but we closed the week just above this 27.34. So the door was open for this market potentially to challenge up to 28.02, and it did make a run up higher. I mean, we made it up to, what was it, 27.85. But look how quickly we turned around and gave that and slid back. Although we're trapped within this little zone area here, which is the 26.56 to 27.34, so relatively tight zone. Let's go on and move into the 2-hour chart to get a little bit closer idea of where we're going. I'm just going to go with this 26.44 because, once again, with the potential for the cash dollar index, despite the woes in the sterling overall, I think that the cable itself has a chance to go on and move higher. So we're going to go on and put the buy support here at 26.44. We have that in place, and the resistance right there for 27.40. Let's go and move into the Aussie dollar. Well, we're right up here against bias chart resistance that we had in place, and I don't see any need to go in and change anything here. Well, we can potentially change it, but I'm saying is we're holding here at the 70.13. Boy, this Aussie has already had a very nice run. And one of the things we were looking at yesterday was, when we talked about this, I think we even mentioned this on the daily wrap, was if you look back over here to 70.13, I think I even mentioned that's been a key level, and it could go much further back here. I mentioned since Moses crossed the desert, boy, that 70.27 has just been around, and for a while here. But I thought to myself, or when I mentioned, I go, I'm not even sure if we can make it up to the 70.27, which that's why we put our bias chart resistance here at 70.13. Here's the issue, though. If the dollar breaks lower, it certainly can open the door for us to move higher. I'll go and stick with the 70.13. It's not that we can't push higher, and we know that 70.27 is key, but a lot is going to – we've already had one heck of a run, and – what's going to happen if things don't work out with the meeting with Trump and Xi Jinping. So we're going to stick around. We'll stick around, but we'll stick with our 70.13 and support here at 69.44. No changes. Let's go and move into the Kiwi. Well, we had our bias chart resistance here for 67.09 yesterday, and we've actually come to 67.11. There, 67.11 or 67.11.7. So off by what, 2.5 pips or something like that, nearly 3 pips. But we're going to keep the 67.09 here on the Kiwi. No changes. And on the downside, same thing here, 66.38. So let's go on to move into the dollar CAD. Once again, and the Kiwi, but to a lesser extent, has the same issues. I mean, we're going to see what happens with the meeting with Trump and Xi Jinping. I don't think that anything is going to come out of it. The only thing that I do think will actually play out is that Trump's probably going to go and say, okay, well, I don't know if he's going to say it's a success, but it's going to go and mention something like, okay, well, things look great, and China's really trying to get to the table, so we're going to have a little bit more negotiations, and we're going to put off the tariffs for right now. We're basically selling a bill of goods that, hey, we're almost there. We've been hearing almost there since before Christmas. So that's what I'm thinking is we'll get, but the risk is still, what if they don't get it? So that's why we're going to keep everything the same here with the Kiwi. And I think that it's hard to go and get much of a move. Now, obviously, if they got some kind of agreement, I don't see that happening in the short span of time they're even going to go on and meet. But the risk certainly would be for us to go on and pull back. So let's go and move into the dollar CAD. So we had been looking for a move, a target overall was to 31. Even you can see that next target is 31 cents. And we did make it down here to 31. Now we're looking for a pause at 31.36. The market popped back. I still have the position from which I didn't get out of, the 31.27. I had added at 30.15 and got out of that. And I don't know why I didn't get out of the one here, but I thought, okay, we'll probably make it up to about 31.48. And remember, there was even the potential for 31.83. We'll go and take a look at that here. But we do have Canadian data out today, so there's a risk that we can still jump back up in here. So we're going to go and put our resistance to come in at 31.61. So move that down to here, 31.61. And support, well, the support comes in on the below this 31 at 30.80. 30.80. Right there, 30.80. So that's what we're going to mark right now for support. Now, it doesn't mean that we couldn't break below that. Obviously, things have the CAD has strengthened very much. It has been almost relentless. But for right now, that's what we're holding at. That's what I was looking at, mentioned to a couple of the guys in the chat room in the Asian session. Hey, look, it's 30.80 is the next level of support. So we're still holding just above this. And we'll move into the peso. And let's go and move in. I just saw where Olivier mentioned UK data, and he's correct. UK data out. So let's coming up. One moment. There we go. Let's go and take a look at that real quick. And that's in the next 10 seconds. There we go. And no reaction. I'm looking here at the Guppy, 36.38, no reaction there. Sterling versus the odd, we're still moving, we're still lower, but no reaction there either, 80.67. And that Sterling versus the odd is continuing. Well, obviously with the odd strengthening, certainly would be weaker, but no reaction to this data here at all. So let's go move into the peso. Well, this market has not moved. We made a quick foray above that key 1923.6, but nothing here. We're just kind of basically stuck in this area here. And we had our low here at 1912.5. We did see a dip just a hair below 10 and 1909.3, and then the market popped back up. We'll take a look here on a 2 hour to see anything, but this 1923.6 still remains key on the upside. And support down here, we had at 1912. Market is above holding that. We'll stick with this 1912. Actually, it's just, we'll stick with that 1912 right here for the peso. And let's go move into the dollar yen. Euro still holding up very well up here. There we go. I was working a bid overnight, just in case we dropped or whatever. I think it was 38. I'd have to check. Obviously, I don't have to worry about that right now. But I mean, disappointed. I thought we might. I go, just in case they happen to drop them, I want to be picking it up because I really felt strong about the euro moving hard. But I did not think it was going to move higher at this point. I did scalp a little bit overnight, but especially when gold when took off. Actually grabbed a little bit of gold. Actually scalped from the upper area, posted that, we had a good resistance in the gold market with the XAU, went right to the 61%. But let's go on and move here with the dollar yen. But I don't have anything with the euro right now. I had thought about just going along, just holding on, but I thought I'll just put a bid under here. But obviously we've made this run up here, so we'll see what happens after that. I'll probably wait till the US data to see if we can push, but I know this thing is really going to go and take off in the sense of what the cash dollar index is going to do. And it looks like it's already making its move. That being said, let's go move into the dollar yen. And we'd already seen this move down here to the 676. We referenced that level here, and we saw a nice move up in here. We're kind of holding steady here. I think we're going to have to go and move into the 2 hour chart to see a little bit closer view of where we stand here. If we do break lower, we're going to go right here, which is not very much further. Hang on, right there. 743. $805. This was tricky. I don't have a real good feeling of what we want to do here with the dollar yen. After we came down to that 676, we saw a nice, decent bounce back here, and the market's kind of sat, then rolled back here, and we're kind of just languishing here in this area here. I don't have a real good take of what the dollar yen wants to do at this point, but we'll go right here with 806 on the upside. And we've already covered the cash dollar index, but once again, it's so important. I'll go on and We'll just quickly review it again. And once again, my concern is that after we dropped here and we were looking for this 95.90 area to hold, which it did hold. I mean, it took it out by, was it 4.5 more ticks or something like that, but it did hold. But I was looking for a more concerted bounce from here. And potentially, if we came into today, I was looking for the market to be bid going into the G20, and potentially we'd come up in here. Probably we'd even come up here to the 60s or something like that. Actually, probably closer to right there, 73 maybe. And this has been a very, very poor showing and really risk going through, I don't want to say a torrential slide, but a pretty good slide, and then even moving lower. Henceforth, why I think the euro can really start to go in and move. But I was going to wait until the U.S. data, but we'll see what happens. The U.S. data might be where that opens the door for the euro just to really turn around and take off like bananas. And like I said, I would caution, do not get in the way of this move lower, i.e. the euro higher. And once again, like I said before, for those quick to bash the euro because of its economic woes and Draghi talking it down, look, it's all about this cash dollar index, and the euro comprises 56.4%. So I would not be getting in the way of this move lower. The Fed's already said, and yesterday I made that case, is the Fed has already said they're going to be scrutinizing the data, the upcoming data that much closer to see if it's transitory or we're starting to get a grip. And if we are, then the talk's going to flip right back to 50 basis points, and this dollar index will really come undone once the market gets into that thinking mode. And it's going to be a shoot first, ask questions later. And I think you can do that when you're looking at from where we are. Look at this level. There's a whole heck of a lot more room to move lower. Let's go and move into the cross rates now. As I mentioned here with gold, boy, we have a pretty good little nice move here. And we gave a pretty good little chunk of it back. I was thinking we could push it in, if you're looking at the XAU, we could push back into the 90s. But we did generate a buy signal here on the 30-minute. You can see it with the exponential moving averages. And we rallied up in here, and this was a 61% when the market ran out of gas. And from there, we took a slide, and boy, did we get a pretty good slide too. I would have thought that on the pullback, I grabbed a couple of dollars off of here. I wasn't sure what the two levels. I was looking at this level first, and I was looking here and here. And I thought, well, you know what, there's a potential, because once again, like I said, the market's pushing as much as it can. And this came in right here at the 61%. Grabbed a couple of dollars, but I did not think we're going to turn around and slide like this. I would have thought we'd probably hold just below here and then continue to move a little bit higher. But we had a pretty good pullback here, so knocked a few people probably on both sides here. It was a pretty good move, and I would have thought we would only just pair back just to maybe, let's say, to 17, and then probably try and push a little bit higher. But boy, did we give a good chunk of that right back. And now kind of middle ground it, but still, anyone who bought and hung on is probably regretting, where they're at right now. Okay. But let's go and move into the Kiwi yen. There we go. Well, we had 72.26, and I don't see any reason to change that. I mean, the Kiwi's just doing very well, but once again, the risk is going to come into what's going to happen at this meeting. We'll go and when we look here at on the support side, 71.75, we're going to stick with that too. 71.75, and we'll stick with the 72.26. So you can see that's bracketing, especially here on the top. It's really holding this market in check, at least for now. And I think the risk is with the Kiwi in light of what may happen this weekend. So let's go move into the euro in. Well, we're kind of middle of the road in it right here. Stuck in these two ranges. Let's go move into the 2 hour. Because of the potential for the euro, right there, we're going to go with that 22.90. Actually, 22.96, and we'll keep this in 22.96. As far as support, here's that 22.20. Well, it's right here. We'll go right there with 22.22. And let's move into the euro odd. In some ways, when you consider the strength of the odd, this has held up relatively well. But then again, technically, we were really open the door for us to break out much higher. Support's going to come in right there at 62 even. We'll go right there at 62.81. And for the euro kiwi, we'll go with just a little bit of an overshoot here. With the euro, on the cusp of obviously first is a dollar though, but I was going to say on the cusp of a breakout. We're going to go with the 69.47 for support. With resistance here, we'll go 70.28. Moving into the Aussie yen. Well, with the risk with this meeting, we'll stay right here with this bias chart resistance 75.67. We got 66 cents, fine. And we'll go with 75 even. And let's go move into the guppy. Let's go with 36.15. On the support with resistance, $36.98. And let's finish up with sterling odd. Boy, this market has continued to weaken. We're just below this key level, 80.89. Well, the risk is down to 80.37 here. I just don't know how much further it can push. Not that it can't, but I'm just saying is we are really take a quick little dip here. But let's go with 80.37. Upside here is for right now is 81.31. 81.31. Let's go move it back to the main screen. Obviously, the key market that we're looking at today, the cash dollar index, yes, and we've already touched here on the cash dollar index. We'll go now back to the euro dollar. Well, right now in this zone here between 1389 to 1413, and we talked about the 1417 being our bias chart resistance, but this market can really take off, and be careful. Like I said, the concern is really de facto for the cash dollar index. Let's move this over here. Here we go. We can really my take is we're going to close above 1413 today. Okay, now it's just a matter of, like for myself, other than a couple of scalps in the Asian session, and I'm talking about here with the euro, I was looking to buy this thing as we had that chance coming into the New York session, thinking that the dollar index would still make one more push, and then I was thinking that this would be a great opportunity to pick up the euro, but we're just not seeing it. And I even saw, I told you a report last evening I read, and they were looking at the support coming in 1348, but they're looking for a move all the way up to 119.9. 119.9. I think they're looking for a pause around 1570, I believe it was, around 1570, but potentially a move to 19.9. So I'm not too worried about this. I don't mind getting long, chasing it. I'm going to give it a little bit of a dip. But when you put that in context, you think, oh, well, there's a lot of room to buy. And look how this market is still holding. I mean, right in here is it's 1368, so you're not that far away from that, 20 pips. But I think that we'll close the day above 1413, and this market can really start to scoot. And I think the dollar index itself is going to be in some trouble. If the data, the consumption data comes in weak, it's really going to once again solidify the case, and then we're going to start talking about, the market will start to, well, it's already priced in 25 basis points, but now it'll start to take in 50 once again, and it could really get us clipping again, and we have not paired back at all, really. So once again, like I said, I think we'll close about 1413. Potentially, we can make it up here to 1445. Now, once again, our 1417 is our bias chart resistance, but that's just where the market's going to we'll see a stand. They'll make the stand there, but I think we can easily get past that. So that's what we've got here for the European crossover. Good luck trading, and thanks for joining us.